I think Adam
This is
Aaron
going to
gives
be
zero fucks about the
an
stock
interesting
squeezing. I
perspective
think he
on
exclusively cares about making
streaming.
AMC the best company he can make it. Like,
It's
I
gonna
don't
be
think he
quiet.
cares about a squeeze.
So I definitely suggest putting some
Speaking
music in the
of
background.
squeeze, what's the market doing here? A nice high or low?
Let's see.
All right, we'll definitely be watching that. All right, we're at 368.50. The high of the day is 368.58. I'm wondering if we're going to test and break, or is it going to be a double top and we're going to get knocked back down to this trend line? Rumble kind of going flat right now. If this starts to get movement on the day, please let me know. What's going on with the dollar index? Kind of trending to the downside, so keeping up with that loosely inverse correlation that we see with the SPY right now. We could check on the pound in a little bit. Speaking of Tesla being a big block here, one of the bigger ones, Tesla is actually having a really, really good day. How is Apple doing? Apple having a phenomenal day. Microsoft having a good day and holding, not really moving anymore like it was the first 5 minutes, but still having a solid one nonetheless. Amazon having a good one. Meta the weakest, so still green on the day, but we just kind of ran through all the most influential ones on the S&P 500, and they're all looking pretty good. Meta was the weakest, but it's still green on the day. And just so you know, this is called, oops, I just exited out of something. This is called FinViz. If you want to check it out, it is a free tool. A free tool. Let me get this back to where it needs to be.
Yeah, so at the bottom you're going to see some
free tool
text being placed from my sources.
So a nice higher low, same high, classic wedge
interesting
situation.
and important. The sources don't matter.
Let's see how
They're
this
available
actually plays
everywhere.
out. The dollar showing a bit of weakness, which should be good for the SPY. AMC and APE, high volatility, pop all the way up, sell all the way off, popping all the way back. Will be interesting to see how this all plays out.
All right.
It'll be interesting to see how it plays out. How'd you guys vote today? 58% of you said red. 58% of you said red. Interesting. Well, maybe you just meant after 10 a.m. Maybe you're just giving yourself a little bit of wiggle room. How would you play APE for those of us still holding? I mean, I'm still holding myself, but that's exactly what I'm doing, is I'm just holding. I guess to me, logically, it made more sense of like, if I'm going to sell APE and transform it into AMC, it made sense to wait for APE to be more valuable than AMC. Unfortunately, that just did not occur. We are not seeing that at these current levels. So I'm kind of just stuck with it. I don't know if maybe psychologically I'm inappropriately looking at it as a sunken cost. I mean, and that's when you have to trade your own portfolio. I mean, I know what I'm doing. I know my financial situation. There's no way I could possibly give a general blanket statement that would apply to all of us. Some people, I don't know, might be selling covered calls against it. Other people might have already sold it and bought AMC. Other people might have completely sold out and said, fuck it, I'm done with this. Other people might have sold their AMC and bought APE. Other people might have doubled down on both. If I could tell you, if I knew exactly where all this stuff was going, I would tell you and be like, hey, this one's going to be the one, the biggest percentage return. We got to do this, this, and this. I don't, there's still some unknown risk in the situation. And APE now, based on the average volume and the announcement from this morning, it sounds like it's going to be diluted for a bit. How will it react to that dilution? I don't know. When's the dilution going to end? I don't know. There's a lot of questions, and I get it. There's so many people out there, and I know that there are many of you who would prefer that I just say, like, have some sort of positive spin on it. But like, all this is happening, but it's good because of X, Y, Z. And like, hey, the squeeze is still on, and the MOS is still going to happen tomorrow. And just put some sort of positive spin. But the people who do that, they are full of shit. Like, I cannot make this more specifically clear. All these people who are telling you that they're guaranteeing it, those are the worst people of like, no, it has to squeeze. First of all, fucking nothing is ever, ever, ever guaranteed in the market. But then there's also the people that you're going to see on social media, all forms of social media, who are somewhere in the middle of like, okay, it's not guaranteed, but there's like whatever. There's some apparently
mean, look at
percentage
this
chance
day
that they
by
come up
day.
with it. They're like, oh, I
Red
think
on the
this is
SPY,
the
green on
chance
the
of this
XY,
squeezing
red
is
on
like
the SPY,
X
green
percent.
on
It's
the
like,
XY.
how would you come up with
Somewhat
that?
red
No
middle,
one can do that type of
somewhat
math. Those
green
types
middle
of
on
models
the
don't
DXY.
exist. So those people are still hopium and
Red
copium.
green,
Like
red
they're
green,
doing
red
this for
green.
Reddit upvotes, for Twitter
Green
likes,
green.
for admiration from a
Green
community,
red.
for more views on a
No, that
video.
makes sense
It is
too.
hopium and
Opposites,
copium, and
right?
it is fucking dangerous because
But
that's
over
not
here,
how
it
you
was
should
kind of
engage in the
like,
market.
I don't know,
Whatever it
chilling.
is,
What happened
what is your
before?
risk? What is your reward? Everything when it
reds,
comes down to the market
opposites again.
boils down to that.
Yeah, it's pretty
And
highly
this
correlated.
hopium copium thing that we're
Until
seeing,
when did this
they
correlation
are
stop?
trying to like understate
going green
all
all
of your
the way
risk
here.
and overstate all of your reward.
Yeah.
And that's
okay.
great in
Green, red,
many
green,
things in
green,
life.
red.
Sure, have at it. But when it
Green,
comes to the
green.
market,
Here,
the market,
no.
where these things go,
No.
these price levels, whether
This
up or down,
section here.
give a
It's a
total of
mixture.
zero
It's not
fucks
directly correlated,
about
but it
like
still
your
works.
emotional tie to it. Like the market is one of the most humbling creatures, organisms ever created by man. It's not going to care about
So,
if you want it and people screaming about
interesting.
this or that. The market's going to do what the market's going to do. And then when people are like, they're applying all these insane falsehoods to it of like, oh, they're not going to get diluted. Okay, well, now we admit it's going to get diluted. Oh, but dilution's
man,
good.
AMC's
Like they
getting
just
hit
keep moving the
heavy, but
field
we
goal
are
time
very
and
strong
time and
on
time
this. We're
again.
actually-
And it's not going to last forever. Like the
This
rail, like it's,
769
the train's going to go off the rails. You can't do that type of shit.
is-
For people guaranteeing a squeeze, they're wrong. They're stupid. You can tell them that I said that. For people trying to tell you
599
there's
was
like, oh,
before.
there's this percentage chance of this happening and this
See how that
happening.
line,
When you're
599,
talking about a squeeze,
we
they're
never got
also
below
wrong
it
and stupid, and you can tell them
before
I
we
said
popped
that
up
because they
high.
are like
Same
they
thing
can
here.
never ever back it up.
And we hit a
It's
couple of
just
times,
pure
much longer
fucking
period of time.
insanity, and
But it
it's
still
super
correlates
super cult like.
between this
And
section.
the only reason I really
this
get
section.
fired up about it is I give also like the market, I give
This
zero fucks
section,
about
not
those other
this
people.
section.
Like if I'm hurting their feelings or if I'm
Well,
saying what
that's
they
gonna
want,
be a fun
I don't
captioning.
care. I really don't fucking care. What I do care about is you. I really, really care about you because I don't want the whole debacle of AMC, GME, whether you made money, lost money, any of that stuff. I don't, for the people maybe in the latter camp, I don't want it to leave a bad taste in your mouth. Are there horrific issues in the market? Are there things that need to be reformed, fixed, repaired? 100%. But I also believe that there's been no other vehicle ever created in the history of mankind that is as efficient at wealth generation as the market. We have never had such an amazing access, direct access to upward financial class mobility, and that's all thanks to the stock market. So I get it. Is everything peachy and great? No, there's obviously things that, like I said, need to be fixed and repaired and discussed. But also, it's still overall, it's still a remarkably good thing. There has been, I will double down, triple down, quadruple down on this, that we have never created something that is better at generating wealth than Wall Street. We really, really haven't. And because of that, that's why I'll fight for it. Like I like this conceptually. I like what it represents and what it can do so much that's why I like dedicate my career right now to fighting to improve like kind of the downfalls of it and maybe some of the nefarious players who are going to put at risk of what the whole thing represents. So I just, all of this, I mean, right now, like I know there's many of you that got into this world because of GameStop, and then that was followed by Doge, and then that was followed by AMC, and then that was followed by Shiba. And before that, you might have been like, dude, I don't even know like anything about the market. And hey, that's fine. That's perfectly fine. Everyone starts somewhere, but understand it's far more than just certain groups talking about a squeeze. Like this, like people have monthly income strategies. They make crazy trades. They learn more about the market. They're more connected to the economy. They're more connected to politics. Like there's just so many things going on that I think are awesome. And if you learn how to play this particular game or solve this particular puzzle, I mean, the sky's the limit on it. I truly believe that.
That's better.
All right. The market actually kind of breaking out a little bit right here.
Does this text
I'm
fill in the
A little
spot?
bit of a fan on it. A little bit of a fan.
You better change that to fill.
All right. Do I want to play this? Yeah, not quite my moment. I was thinking about maybe trying to play this upside gap fill. I just don't know if it's necessarily for me. I don't know if it's quite for me. In terms of my active trades, just want to make sure I have no positions there. Yeah, the only thing I have going on right now in terms of my active trades are, bro, just tell them you sold. LOL. AMC has gone till ever since A screwed retail over. I mean, you can see that I have AMC and Ape, so obviously it's not like I'm out. Like clearly, like look at, I have AMC, I have Ape. It's there because I understand what it represents. But I very much wish the situation was better. My only active position as of this exact moment is one SPX put. October 3rd is the expiration, and 3,575. 3,575 is the strike. They're currently trading at 23. I got in at 932. Like I said, I just have one put. So I have kind of like one medium dated YOLO put, and that's my current situation. Matt never says anything nice about AMC, unfortunately. I say nice things when there's nice things to report. Like, it's not positive or negative. I'm reporting what's going on. I'm explaining what's going on. There's your positive or negative interpretation. That's kind of up to you. I mean, I can't tell your brain how to interpret what I'm saying. I'm here to say, yeah, they filed to do a dilution up to 425 million units of Ape. And you can interpret that how you want. But, like, I'm not going to go out of my way to, like, make up bullshit. Like, that's great. Like, that's fucking insane that they're like, I just need someone who's a cheerleader. If you want a cheerleader, go watch a cheerleader. I mean, if you want to have a better understanding in the market and a better opportunity to actually make money, okay, cool. You want someone who's going to tell you how it is, not just like conform to, like, I guess, whatever your current emotional basis is. Shrine ES Dixie is popping. Yeah, so Dixie pop, ES kind of coming down right now.
If you want to experience all the different tastes in a coffee, open up for all the different elements in that coffee.
Allergies don't have to be scary. Defeat allergy headaches fast with new Flonase Headache and Allergy Relief.
2 pills relieve allergy.
And the congestion that causes it.
Flonase Headache and Allergy Relief. All good.
Today I want to explain why AMC being acquired will spark the short squeeze. I also want to tell you how we're currently repeating all of the fundamentals that caused the VW squeeze. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So, Rocket Astronaut tweeted asking, is there a Disney partnership coming soon, or is Disney planning to acquire AMC? Now this is a cartoon drawing tweeted by Pixar with the caption, checkmate, a term commonly used by Adam Aaron. So maybe Pixar and Disney are planning to acquire AMC and form a powerhouse of movies showing goodness. But why would AMC being acquired actually spark the short squeeze? And for that, I have to refer back to the VW squeeze back in 2008. Now this article says the entire episode harkens back to the days of October 2008, when Porsche inflicted a similar short squeeze on VW, its fellow automaker, an occasional but long-running business partner. Now obviously AMC and Disney do have a long-running business relationship, and it's very, very possible that Disney could indeed acquire AMC at such a low market capitalization. It said indeed right in the midst of the global financial crisis, when following the collapse of Lehman Brothers, which I'll touch on in a second, as we're about to have another Lehman Brothers moment. It says investors were panic selling across the world and markets were tanking, just like they are right now. And it says while these markets were tanking, the mother of all short squeezes arose, as one analyst at the time put it so. It says by 2006, Porsche had announced that it wanted to boost its shareholdings of VW and did so by acquiring substantially more stock in the company, which in turn began pushing the share price higher. As the price continued to rise through 2007, many hedge funds held the view that VW stock had become overvalued and actually increased their short positions in the troubled car maker, just like they did for AMC when it was running to $72 per share. And as the global financial crisis unfolded, of course, VW only suffered further as the demand for new cars collapsed, just like AMC has been falling over the last year and a half. But by March of 2008, Porsche owned 31% of VW and confirmed at the time that it was not looking to increase its holdings to 75%. Nonetheless, it became apparent over the ensuing 6 months that Porsche had indeed decided to up its interest in its rival, which it revealed to widespread astonishment on October 26th. As such, Porsche suddenly held the potential to control 74.1% of VW, and when combined with Lower Saxony's 20% holding, that made 94.1%. Practically 95% of the float. Now, obviously, we're in a very similar situation when retail investors hold 90% of the AMC float, or indeed 100% of the ape float, seemingly. And it says, but with around 12% of VW's outstanding shares sold short, it was impossible for every short seller to buy back their required shares and close out of their positions, as there was only 6% or 5% of the float being traded. At that time, panic among the short sellers set in, and the supply-demand imbalance triggered a monumental short squeeze that drove its share price up from €210 to more than €1,000 in less than 2 days. It says ultimately those hedge funds that had shorted the VW stock ended up losing an
China isn't actually as high-tech as you may think. When you think of China these days, you probably think of high-tech, flashy cities, big skyscrapers, high-speed rails. The fact that most of the gadgets that you buy on Amazon and the little tech things that you get are all made in China. Well, even your iPhone is assembled in China. So China's pretty high-tech, right? Right? Wrong. So when you're posing on a motorcycle that's far too powerful and far too heavy for you, and you can't even reach the ground with both feet, you're gonna need a slim wallet, something that just fits right in those jeans. In fact, I can't think of any situation where a thinner, lighter, better is having enough literally wallet called a point pen, something that's been around since I believe 1888. Only recently was able to be manufactured in China. Now, okay, that's not entirely true. Most of the world's ballpoint pens do come from China and are manufactured and have been manufactured in China, right? But it's the tip. It's the actual little ball that moves around in a socket that China was unable to make. How recently did China make a ballpoint pen? Finally, how recently is it that China was able to manufacture this very well-known technology? 2017. I'm not making this up. You see, the way Chinese industry works is very little is ever spent on research and development or innovation. The majority of the time, intellectual property is simply stolen, copied, reverse engineered, and if it's not possible to do so, if it's too difficult, they just buy and outsource certain products which cannot be locally manufactured in China, the ballpoint pen tip being one of those things. You see, it's quite precise. That high tensile metal, the way it all fits together, the thinness of it, it was not something that the Chinese steel industry could produce or reproduce and recreate. So even though China was producing the majority of the world's ballpoint pens, they had to actually purchase the little tips from Germany, Switzerland, and Japan. So there you have your manufacturing industry in China, the pen industry. They can, of course, put together the little plastic sheath. They can put together all the little bits and pieces that you need. But the actual tip, the ballpoint, they could not make themselves and had to import. And of course, it's costly to import these parts. And it also means that China is not self-reliant. If suddenly trade routes get cut off, if trade deals get cancelled, they would no longer be able to make ballpoint pens. So what changed all this? Well, it got to a point where, in fact, the vice premier of China, Li Keqiang, made a speech where he said that when he tries to use Chinese-made ballpoint pens, The writing is very rough and inconsistent, and he called for a big change, and there was a lot of political spotlight thrust on the whole ballpoint pen industry. And it took 5 years of an incredible amount of resources, time, money for China to figure out.
Testing, 1, 2, 3.
I mean, of course, they've been trying forever. They never really got it right. But when the political pressure was on and they were told you must create a domestic ballpoint pen, it took them 5 years of dedicated research and development. Now, I think we can all agree that a ballpoint pen is not as advanced as a microprocessor. And this is where China sits right now.
Beautiful day in Baltimore, where most people probably know that Geico could save them money on car insurance, right? Well, could help them save on boat insurance too. Okay, request to come ashore. Geico.
Blueberries. Sweet.
You may have heard of this whole thing about chip embargoes, sanctions, big companies like ZTE, Huawei, and so on being banned from purchasing certain chips from America. And you probably think, that's a bit absurd. Why would they need to? China's this massive manufacturing country. They can surely just make their own chips. And that's the problem. They can't. Now, I have a technical background. I've always had an interest in electronics and computers and so on. And I used to live in Shenzhen, the so-called Silicon Valley of China. This is the tech hub. This is where all the technology comes from. This is where the technology is made. This is where your iPhones are put together. Everything in Shenzhen. So I used to go to the electronics market all the time. Of course, that's what you're seeing here is footage of me filming inside the electronics market. This is where you can buy almost anything that you need when it comes to electronics. But I'd like you to pay attention to what these people are doing here. And you see this all over. They're not innovating something here. What these ladies are doing here is stripping down technology, refurbishing and repurposing chips, ribbon cables, all kinds of components from existing technologies. You see this a lot. They'll be breaking down certain phones or tablets or old computer parts, and they'll be scavenging little bits and pieces that then can be reused or resold back into the market. Not only are they used in
I would rather fight. Yeah, I would rather fight a medium-sized.
Okay. Okay, nothing interesting happening. Other than the fact that the market's going to shit, but that's a thing. My caption not working right now, huh? Oh, there it is. Oh, you fell asleep, caption. Still need to organize some stuff. News. Where's the folder? Where's the freaking folders? Can I add them together, please? Oh, group selected. Yes, that's what I would like. There we go. Oh, group. News cap. Hardly. I'm doing a few things, but hardly reading. The microphone's fine when I get up close and personal with it. But when I'm moving around, obviously, it's a little bit hard to hear me. But probably not necessary to hear me. I'm still organizing stuff. So, newscap, Chris, newscap, news and web caption, cool. Group selected. Group. Oh my god. I need to make the chat ding me or something. Can I get the chat on my phone? Should be able to. And if I want to remove that, here we go. Hello, how are you doing? What are you translating? How are you going? Anyway. Let's check out some news. Upstart is on the threshold list? What? Uh, uh, ¿Qué pasó? Let's see. Oh. Whoa. Ho, ho, ho. Yo, Upstart is heavy right now. Almost 40% of the float shorted. 33 million shares on loan. 4 days to cover. Cost to borrow percent 21.29 and utilization 100. So shares on loan, estimate value. The value is, wow, UPST. Let's check that out. UPST. You got a calculator. Value is 2202. Take the 566,760 million. Divide that by the value of 22.01. 25 million shares currently shorted. And the total on loan are 33. So that means there's a difference of 8 million. 8 million being held, not yet shorted. Interesting. That's very. What's the volume? All right, let's look at some live data. 30-minute, 5-minute. Whoa, buddy. Where you at? Oh, let's go. There we go. It is in the upward movement. We've. Is that a reverse head and shoulder? Yo, hold up, hold up, hold up. This is the reversal for Upstart. They got to cover. It's up 20 to 22. It has a potential of 24, 5, 25. After that, it has a potential of 29. No, 20, yeah, 28. Call it 28. Oh, look at that. That's a sweet deal. Let's see. Hmm. Why do I still have 30 Playboy shares? That was pointless. I lost 50 cents. Yeah. Alright. So, options 150 bucks. Let's see. I can get something good for 150. So I'm gonna get Upstart. Let's see. Options. Nice. A full set of options. Very good. I'm gonna go for 23 January. And really crazy out of the money. Not crazy. Let's do 3 cents. 3 cents a share. Get 10 of those. 30, 20. Let's get 20. 175. That's quite the jump though. 22 though. That's not tough. Alright, let's do a little smart. That was a 400. Those are too high. I then will get 2 of these. Instead of loading up on many. How about I split it up a bit? Yeah, I'll buy 1 here, 50 cents. 23 call at what, 70? I'll get 1 of those. And then I'll get the degen ones at, let's do 150. I'll get 5 of those. 155. What? Those are 16? No, son. I want it for 11. I'll give you 11. I'll give you 12. I'll give you 12 cents. We got a deal? Yeah, I went through. And do I want to go even more degen? I'm gonna go like to the 1 pennies, man. Let's do this. 10 of those. No, 20 of those. 1 penny? 10 of those? 20? Yeah, let's. No. What? No, I'm not doing 10 cents. You mad, son? Let's do 2. I'll give you 2 pennies for 20 of those. Heck. Getting filled. That's gonna take some time. And that one's not gonna be. Yeah. All right. So here's what I did. Oh, when it loads, Weeble, where ya? Oh, I'm already there. I'm retarded. I did a upstart. One thing I want to make sure. I like that. Let's do this. You don't need to see all that extra stuff. I don't know. Oh, fuck. Alright, so Upstart is an interesting one. Already up $5. Good. Good. That's interesting. Not that it's gonna be perfect. My puts are good. Ape's annoying. But that's annoying because we have an issue. That issue is utilization. Cost to borrow, kinda not. What are they doing? What are they doing? Short shares. Interactive. Available? Are these available? Yeah, availability table. 250 available to be shorted. Cost to borrow 4.21%. 700 for 4.54. Average is 4.21 though. That's interesting. This was a week ago. But they're saying it's the available has decreased. Right. So wow, that drop was heavy. 7.7. What the heck? 8 mil to 500K. September 21st. So, oh, August? Oh, they report 2 weeks after. So this starts September here. But we've been on the run for 2 weeks. It's about the reporting time. 2 weeks reporting time. So they actually waited for the new week to push it up. Then we get the report, and then it slows down. The next week after the report. Then we get the next report, and it's already red. Okay. Because of the shares, right, because the utilization goes down. The shares available. No, hold on. 8 million available. That means they actually borrowed a crap ton, reducing the availability amount. Around September. The first report is on the 22nd, so that's 2 weeks in. So that's the report here. heavy drop, and then we go down. No, it's not even a week. That's the next day. It's a huge drop, man. 8 million to 500,000, and then they slowly make their money back, returning. And then here, this was September 23. Am I being retarded right now? No, that was 21, meaning the day. That's not the year. I'm totally being retarded. I'm like, we don't have a 2023 yet. Fucking weird. Alright, so that means that's the day. So that's not that direction. I was reading it wrong the whole time. We're talking over here, September 22nd, between here and here. Man, they freaking flip these shares so fast, it's ridiculous. So now we're back in the next loop. Going up. Utilization has been flat 100, man. We are overdue. Like, wow. Since when? February? Sheesh. We've been 100% since February. That's ridiculous. Last time we were only 99.9. We were 100% a couple of times, but we would drop down right away. They've been scraping whatever corners they can find for extra shares. And they're not releasing the ones that they're already utilized. Short interest value. Yeah, I think there was 50 million in between. What is it? Close 8 work. $97 million. So 97 million are currently shorted minus 178.58. There's 81 million waiting to be shorted. These are the total. The 97 was what the current value is in shares. 178 is the current value loaned. Short interest, shorted shares are loaned. Keep that in mind. It's one of the loan types. You can short it to loan, you can short it to hold, you can short it to, or you can loan it to do whatever you want. You can loan it to short, you can loan it to hold, you can loan it to do whatever you want with it, really. But there's only two sides of that. You either sell it or you hold it, or you get rid of it because you don't want it. So right now, these are the ones already sold, and there's a subtraction there, leaving 81 million left short shares or loaned shares that have not yet been shorted. They can be shorted, but it looks like a lot of people are waiting. I don't know what they're waiting for. All right, how much is that in value? 8. 650 million. And how long? How long? Shares on loan. Shares on loan. Where's the shares on loan? On loan average. Shares or text that I've estimated. On loan average day. The average day is 50. Average loan 100. 3 months. Okay, number of loans. Okay. Oh, and the loans have definitely increased. Wow. Okay. That's exactly the issue. And look at that divergence. Between the amount of loans. Oh, wait. Between the amount of loans going down. Oh, God. It changed. There we go. Loans go down here. There's no change in the price. Drops up. We have a price bounce. And divergence happens after this. They got very aware up here. And now even though we're still basically increasing up, we're not seeing growth. We're not seeing pops. We're seeing a downward. Right? So we should have went up every time the loans increase. Right? At least that's the pattern here on the short term. Not even that short term. We're talking 2 years. Longer than 2 years. Yeah, same. No, actually inverse, actually. Loans going down, price going up. Price going down, loan goes up. Then that makes sense. When the price goes down, you're loaning to sell short. And it goes up again, and it goes down. That's interesting. And then it goes down, and it goes steady, slight up, jumps high, and then it totally tweaks out. It does like a double, like a down, but then a up. Because that's a massive, that's the only, yeah, that's the outlier. This was a short squeeze. It had nothing to do with any other sort of movement, natural movement. So if that's the case, we're only in the beginning section. Actually, yeah. Holy guacamole. So when we were going up, we had a downward and then a spike. So we're going up again. We still have a downward. This one was like, I wouldn't say downward here. Let me see this. Because really it's an average down like this, right? So this go up, downward, up movement. At the peak, loans start going down. However, as we're going up, going down with a boom. So as we're going up, we're going down, and then somewhere in this space, there should be this sort of surprise loan liquidation, especially with the market. So the pop should be somewhere around here, which can be proportionally, it should be here soon. Maybe 6 months, year soon. Because proportionally here to kind of here, you got like a triple, quadruple interest. The movement in the past is now a very violent, higher movement of the future. So what used to be this much float and this pattern, now it's becoming this with a extra sentiment of bearish movement. right? So the bears are winning here because we're getting a negative. But it still forms the same. That's why the movement down, it could have been something of this. It could have been this if people didn't sell, but that doesn't change the fact that we're still in the same type of flag, just different skew. Well, the more important thing is that the movement of the past, 1, is about 1/3 the size of the movement of the future, 2. Or reverse, the future is 3 times as strong as what the past used to be. So if we consider that into the factor, 3 times, as we went up, 3 days becomes 9. I would consider testing that out. We need a starting point to move up. We went down, so now we go up. 9 days from here. 9 bars. 9 bars, because I'm in, what am I in? Probably in months right now. So 9 bars. Next one. 1, 2, 3, 4, 5, 6, 7, 8, 9. I mean, we see a spike, an attempt to repeat the pattern. But it was brought down by something. And we know that AMC is one of the biggest corrupted stock shares that you can own. And that's a fact. So each time that it tries to do what it does, and they're trying to fight it hard now because they learned their lesson here. This was 70. Then go to what? No, it's something else. That's the utilization value. That's not money. So yeah, here's the money. This was about a 40, 20, 40, 60, boom. Call it 50, 55. Here highest was like 74. And they didn't like the space at all. So they had to push it down and down. They probably held off covering shares until they can get down to a certain point. Okay. Volume. About 8 bars. 9 bars. Call that 5, 6, 6. This kind of counts. It is above the others. So yeah, 6 bars. We call those 6 bars of high volatility. And then a calming but still high. And what's this? That was 9. 1, 2, 3, 4, 5, 6, 7, 8, 9. Low. We're getting some high pops and volume, interest increases. What's Google Trends telling us? All right. Here's how this works. This is exciting. You need data frames. There's for me, I'm using Pizza Near Me as a general search anchor. This kind of helps me understand kind of a general thing that we do in everyday life. You know, how ordinary is it? You know, pizza near me. We can tell that, well, pizza near me is pretty ordinary. And at one point, AMC was above the ordinary, really high up, double if not. And then it hovered above. Of course, if we consider this, it's probably, what is this? September, January, is this the $70 spike? September. Oh, right here. No. Oh, interesting. 21 September. Not quite what I was expecting. So, above the ordinary, AMC, 61 pizza near me, 1 recession, GME 6. This was September. This span of time here. Okay, so let's kind of, okay, we don't have a good, that's only 12 months. Let's do 5 years. That's better. There we go. That's what I'm looking for. So you can see how pizza near me, it's pretty cool of an anchor. And you can kind of think of any other phrases that may be used psychologically on an everyday basis and get an anchor for a value. AMC was above heavy, GME heavy, so GME is up in the sky here. This was a squeeze there. This should be in June. Yep, there it is, June here, AMC. Then this was what we were looking at. No, this is December. What happened in December? Oh wait, this was in June. Yeah, December. No, June. Nothing happened. This was the downward churn. I guess this was a downward churn where everyone got scared. So this might be easily the fear. 21 to 22? Yeah, 21 to 22 right here. So that was the fear. Okay. So GME squeeze, AMC squeeze, December fear that goes down. Of course, these were up for both of these as far as price goes. And we're kind of hovering down in a lot of situations. AMC again had a interesting pop, drop underneath interest. Came out of nowhere, dropped. So maybe we're waiting for another drop underneath interest before another pop comes up. And we're kind of getting there. We're kind of getting to that point. Here, if we look at the most recent 90 days. Jesus. Pizza and AMC are starting to look very similar in boredom or similar in usage. So there's that pop September 2nd, 3rd. I believe this was the whole ape split. Oh, that's a good one to put in here. Ape. I hope all capitals does something. Yeah, nothing. How about ape? Can I do math? Can I do ape plus AMC? No, it's gonna do a literal string. What? 33? Yo, what? Wasn't ape 3? I did the math. Ape is 4, 33. Ape plus AMC. That's close, I guess. What if I subtract? Yo, I just unlocked the next level. Pizza. Wow, did that just negate itself? Ape. Where's the 5th one? 1, 2, 3, 4, 5. Pizza, recession, ape, AMC, and then subtract them and they're gone? Something is fishy, weird. How about divide it? Math? Does it work? No. I guess that just means that people were searching ape plus AMC, right? So if I change recession to AMC plus ape, that should be a totally different value. Because then math would not be the case here. What? Okay, it's doing math. It's adding them together. So 36. Okay, so we can add. We can't subtract, but we can add. What happens if I subtract again? The line goes nowhere. It just disappears. AMC is higher than ape, so that should be fine. This one actually would be wrong when you subtract them, because AMC is higher, so then you're going to get a negative number, and the negative number should not be here. But can I do positive AMC minus ape? How mathy does this get? I think the only math here is adding. All right, so AMC plus ape. Keep that there. And I'll remove this. So pizza near me, AMC, recession. Let's test that again. Very low, but increasing. A fear over here. 49. July. July. Is that when? July was when the market went up? That's weird. Hmm. How does recession become a prominent subject? July 28th, 22, July 22, July 28th. So over here, 18 goes up, 25 goes up, 28th. We're talking about 25, close enough. We're talking about recession. It goes up higher. Maybe because like people are looking at recession is over. How about, is the recession over? Not much. No existence of the line. 0. When will the recession be over? Am I spelling things right? I swear, I think I'm messing things up. No, I am. I'm doing it fine. When will the recession be over? Okay, that's not what I want really. So that's not a very good keyword. What about crash? Market crash? Market crash. It's in there. I'm so confused though. Is capital 8 different from lowercase 8? No. Should be the same. Okay. They should do cap. Caps make things mean differently. September. Yeah, GME has definitely been under the radar for a bit. What inflation? Oh, that's coming up. Okay, let's see the yearly. That's a good value there. It's starting to show an exponential curve. Super flat. And then it starts lifting. Lifting. We're up, flying. Eventually it'll kind of do this. And exponentially it should do that. As far as interest, of course, this is just interest, right? This is the interest on a search term, not actual values pertaining to inflation numbers. At the moment, the interest is mediocre at best, but by word of mouth and any other those natural organic forms of expansion and change over time, the process is exponential. So when more people know, more people talk, more people know, more people talk, and in this case, more people search on Google Trends. But that is a little concerning. ordering pizza and talking about inflation was a very similar value. Okay, I don't need this anymore. Let's remove this in the way. About vacation spots. Huh. Wow. Okay. Oh, that's the 7 days. Let's see. 5 years? It should be going down because of COVID and all that. No? Vacation spots. What do people look for? Flight. Flying is interestingly popping all over the place. Flight number. Let's do flight number. Yeah, it's much different. How about Uber Eats? Uber Eats. People be using that a lot. No, that's actually going down. Oh, it's below interest, below pizza. Gas prices. Wow, what was this? That was recently, wasn't it? Yeah, look at that. And then elections came. That's good values right there. Inflation measures the fear. Gas prices and pizza near me measures kind of two of the inflationary necessities: power, energy, and food. And from those standard pieces, can I do... Oh, maybe I can do anything else. Can I add these suckers together? This pizza, this. Nope, keep doing the wrong thing. Cool. All right, plus gas prices. Can I do that? Will you let me? Oh, it let me. Wait, did it? Gas prices, right? Oh yeah, look at the difference. Gas prices and pizza near me, 12 difference, right? Gas prices. Oh wait, hold on. And pizza near me. Regular pizza. Oh, I don't have regular pizza anymore. But that seems accurate. Let me see. Pizza near me. Yeah, pizza near me 23. Add it over to gas prices 88. You get 100 plus. Cool. Okay, so that's good. I can technically add. All right, so I combine those two together. Let's combine AMC because they're similar subjects with GameStop. Nice. Nice. It follows it. And plus, yeah, that's great. That's amazing. All right, now I can clean up some of these. Awesome, awesome, awesome. Let's see. Nice. So blue line getting there. Average of things. People looking for less pizza and less gas. Inflation not doing too shabby. As far as trends on the internet, people are not concerned with inflation. As much as the news media likes to put it, people aren't really that concerned with inflation. These are data values. So that just means that in the overall, people are not worried. We might have a bounce off. We might have... No, I don't want you anymore. You go away. We might go off here nearby, somewhere on here, and we might readjust, potentially making a double bottom with this because of the fear. Let's see another thing. Are we in fear? We are in fear. We're in extreme fear, which normally means it's a reversal situation, if not only temporary. So we've got our big drop. We should have a bounce up. For sure, we're not going all-time highs, so this red line should be the ultimate stopper, since it is initiated by this double shoulders. So red should bring it back down, but we should have another jump, man. If we're going back into a bearish, bullish market, which would mean we'd kind of go in this path. Bounce around a bit, consolidate on new levels. Probably gonna make a new one somewhere over here. And then eventually get strong enough. No fear, no war, no gas gouging. Just straight up new market highs. I mean, this could be 2023, but when you draw these arrows, you don't know how long in time they're going to be. So it could be very accurate, and they could be way quicker, or they could be 10 years long. So the value of these arrows are definitely, as far as time goes. As far as hitting location, accurate. As far as time goes, very inaccurate. We dropped out of that. That's the worst part. We shouldn't, we can't be down here for too long. We have to get out of this underside of this yellow line. If we stay down here for too long, we're basically the red dotted line. If we stay underneath that for too long, we're gonna miss our chance for a bullish market. So basically, if this green doesn't happen, then what do you think would be the next situation? A possible red event. Still growing up though. However, the movements change. And since we've already exhausted a lot of selling power, we're probably gonna consolidate here for a while. People making some money back. Maybe even go back up and test some possible supports or resistances. Maybe even look confident about it. But then you're gonna notice big indicators. Again, big indicators. Double tops, head and shoulders. Those are big indicators of rejection. Oh, but that would be worst case scenario, man. That would be hell. I mean, that wouldn't even be hell, actually. That would be worst case scenario, soft landing. This red. Worst case scenario, soft landing. The other case scenario, hell scenario, where the whole market gets margin called and everyone goes bankrupt. And there's not enough cash flowing to pay off the debt that's going to be margined. In that scenario, things get way weirder. Because that means we can have either one of these two paths, but eventually we're going to go straight down. So we can go anywhere here, because it shouldn't happen too soon. As far as I'm looking at it, nothing interesting is happening yet. So we could take the green path, we could take the red path, but if we instantly have this sort of market-wide sell-off, I mean, this purple line's your hell. We're looking at supports back from 2015. I mean, considering the whole market has been inflated a lot from the money printing, first and foremost. Second, the GDP is like a third or less than a half the amount that we actually have value in the market. The market is three to four times overinflated compared to how much the GDP of our country is. That in itself is a red flag. We've had these movements to consider them somewhat relative, we could take a previous pattern, try to accelerate it in a good market. But however, under the circumstances, we had a lot of printing, especially at the 2015. We had a lot of printing. Lots and lots of printing. There it is. 2015. Let's see. 2015. So from here, we had a lot before, sure. But from here, 2015 and on, you see a slight change of slope. So this one is average here to here. We can call it a slope of like this. That's not even going to be worth, yeah, something like this. Average it out in between. This is the slope of this section here. And then around here, the slope changes to this average. All right, so 2015, regardless of whether it was the initial starting point or a progressively accelerating factor, it changes the slope of what we were doing since 95. Since 95. 1995. Before that, I mean, you can look at some previous stuff. That's pretty cool. We had a pretty simple slope. You know, Industrial Revolution barely happened. But yeah, this is kind of the potential outcome happening here. Now, the printing, however, is slowed, which is great, but I think a little too late and very much overinflated. So all the money that was printed was distributed as notes and as support for the economy. It wasn't given to the regular people. It was given to businesses. The PPPI or whatever the hell that thing is called, and all the other constant floods of money. Well, most of them basically buy stocks. So we're looking at an overinflated market, extreme fear, wars going on, the meme stock margin saga, a short squeeze of a lifetime situation. Just a lot of heavy storms in the market. And if it goes up, if it does somehow magically, if somehow magically the market goes green, in the green direction, I would be completely surprised or extremely skeptical. You know, it could be a false, it's like it has been. All of this is false. All this crap over here is not real growth. This is money being printed and added into the market. All this growth we've had since 2015, right? And we can call it 2008 because we had to print a crap load of money to bail out the banks then. What do you think happened? Well, they put it in the market, made more money on that. And now they're playing with money that they're basically borrowing on margin. And not even just borrowing once. People are lending it over and over. Over and over. Like multiple people, same share. Like that's kind of the bad thing about this, right? If everyone was playing with the money they owned, then people just get margin called and they lose the money and that one person goes to bankruptcy. Cool. But when you're playing with margin money, with money that's not yours, well, then you're not only dragging yourself down, you're dragging everyone else that trusted you down. And that's going to be a market-wide sell-off, crash. So red, I see red. I see the red. The purple, way too extreme. I mean, it could. Just one piece of news can make this happen. But, you know, market news, inflation news, like if we're over 10% on inflation, call it 12% over inflation. In the next few CPI reports, purple is going to start looking very, very realistic. If we're kind of fighting inflation, everything's all right, red, because we still have a lot of margin that has to be cleaned out, right? Because the market is overinflated. So all of this needs to go away. We need to go down here somewhere. We can reverse the 2015 weirdness, at least a little bit. We're still growing from 2015, right? If we stick up here, We're still up from 2015, but not all of this exaggerated amount. So we need to flush all of this gain in the market, remove the margin, all the debt, go back down to a more reasonable value for the market. Still overinflated because the GDP would still not match, but it would be way, way, way better, more realistic. And plus, we haven't tested this green line. We've done it 3 times. We fell below each time, but we somehow managed to keep going up. I mean, each time we fell below it, 18 we had some sort of issue with the market. Obviously, 2020 COVID, we had issue with the market. And each time the crash came out, we got pulled back up by our printing of money. Right? So that should have happened. We should have stayed down here. We could have been way better down here after 2020. But 2020 actually made it even worse because after the COVID pandemic and yada yada, well, you're getting yourself some pretty money getting printed to help people out. So we could have kind of settled after COVID down here and just minded our own business. But we printed money. So we can print more money. So green basically, okay, here, yeah, there we go. Can I do this? Can I do the text? Yes, I can. Money printer go burr, basically. Margin flush. CPI, PPI greater than 12% in less than 2-3 months. So those are the directions we can go. I think personally, this is kind of my perspective on it based on everything. Inflation, margin, GDP. I mean, look at the strength of the dollar. That's still kicking butt. DXY. Not an all-time high. Oh, wait, hold on. Oh, we're 5-minute. And it's still strong. Okay. So we're just flying high. 114? We reached 114? Holy scheisse. We've... Look, this is an important value. This is absolutely an important value. If you don't think this is an important value, you're crazy. We've not been above in this dollar currency value since 1981, 1972. This is where we had good kind of, for a couple of, maybe 10 years. 1980s was a good time period. The first half. Jesus. Anyway. But that was the value. That was just the value of the dollar. This side here is when the rest of the world started catching up. Because again, the DXY is a comparison of the global US dollar currency. So US dollar compared to every single other currency. At one point it was 164 in the 85. Probably has to do with war and God knows what else. The normal range we can call 106 to 80. 2000 came. 2 years later, the index fell. 2008? Where's 2008? Oh, here? Oh, wow. 2008 came. Dollar index didn't do too much in 2008. It's interesting. But now it's fluctuating. I mean, you can definitely see some patterns in its history. Bullish patterns. Bullish flags being broken down, but not. A double, that's not a double bottom. Oh, not even a head and shoulder. If anything, this would have been a double top. That's weird. No. A head and shoulder? Nah, it's really messy. Head, or shoulder, head, shoulder, but that's like really messy. So what's the 30-minute look? Bullish. Higher highs. Try to break down so many times. We try to go down. No flush, no flush. And continues up higher. Now it's doing similar to here. So this range probably is going to happen over here between 112 and 114. Probably going to have another bullish pump depending on what happens around the world, Europe. Yeah, there's just so much stuff that leads towards the red direction. Even if we stabilize inflation, we're still going to see some sort of red. But money printer go burr. That's also a situation. That could happen easy. Oh. What else? What else? What else? Total reserves. What's the reserves look like? Money reserves 3.2 billion. Energy. Energy, yeah, inflation. Oh my god. Oh my god. Energy, man. I'm pretty sure this is energy, right? XU, XA. Reverse repo? Oh, god damn it. Stop. Stop. Are you kidding me? It's still going up? $2.3 billion. Trillion, actually. This is trillion. Liabilities, not a lot. Microsoft, oh, FANG. The FANG index. This thing is dead. Like how it's broken down. No one talks about the FANG anymore. Oh my god, I remember when everyone was just like raging. FANG! Facebook, Apple, Netflix, Google. What's the other A? The other A. FANG, Apple. Oh my god. Wait, does it write it here? No. No news on FANG. Zero news. This is how you know. This is how you know the media is freaking against you. When FANG was going up, everyone was talking about it. It's going down, no one's saying shit. They don't tell you. I mean, I would say this already went up before the rest. I don't even know. It spread out. It was one of the main indexes. It was like they would talk as much about FANG as much as they would the SPY or the freaking NASDAQ. As if it's something normal. They'd put the FANG, SPY, NASDAQ right next to each other and show the market health. Now, when the FANG's doing shit, when Facebook's got some weird issues happening, Netflix also, Google, yeah, privacy. What the hell? What's the other A? FANG. Acronym. No. Prominent American technology. No, it's not. Meta. Amazon. Duh. I'm a freaking idiot. Wow. There it is. FANG. But yeah, no one talks about it anymore. Not that important. Kind of funny and weird. Bosnia, Buoyant Dala, Romania, Belgian, Baltic. Interesting. Swiss site deposit. I like the news feed over here. I should be using this more often. Alright, let's do some spy news. Volatility increases indeed. ETFs tied to the US dollar rise as the dollar index hits 20-year high. ETFs tied to the US dollar? ETF US. Oh, DXY. Can I actually buy a DXY? I thought that was just an index. Can I get some DXYs? Can I move? What can buy? No, I can't buy. Yeah, I didn't think I could buy it. Is there anything US dollar? Can I buy? No. No. What is this? Oh, Invesco bearish. Bearish dollar. That's nice. No. It's just one of those shorting ones. Y'all constantly short it. Something happening over here. Oh. Yeah, it's going down. Tesla not doing so hot either. Apple and Tesla looking the same. Tesla a little bit weaker. Berkshire, why are you falling, buddy? You're getting some lows happening on you. Oof, 400,000? Psychological value there. SQQ, VIX, what's the VIX doing? Not crazy. Not crazy. Not crazy, but still. Still has a chance to break upward. For sure. And it might even be doing that. No. Oh my god, sometimes Weeble. Why did you do that, Weeble? I hate Weeble for charting. Weeble is not good for charting. Weeble sucks for charting, honestly. Small things cool, but not anything near as trading view. What about Upstart? Is this going? I don't think so. No, 0 filled. Eek. What do I? Oh, that's basically all I have for options. Let's get that out. We'll keep that like that. Whatever. That's it for now. There's nothing else happening. Everything's going to shit. Volatility's increasing. Fear's going up. And we might have a bigger downward turn in the next few weeks. Other than that, I must stream later if anything interesting happens. Thanks for watching one person on Twitch. Much